Hello, everybody. Good day, and welcome to Mastermind number 86. It's a new month. Actually, yeah, a brand new month, June 3rd, 2024. Wherever you are in the world, big up yourself. My name is Hanif Brown, and I'm great to be here. I feel great to be here with you today. For those of you who are just joining us, again, you can see our agenda on the screen. This is for people who are looking at understanding finances a little bit more. And, forget even about the finances. You just want to get closer to whatever your dreams may be. And we simply sit down, talk about how exactly you can go ahead and achieve those dreams and the hows to get to the what as to what you want. Whatever that may be, I don't know. You're a different person. I'm a different person. So, today, I have in personal development, final thoughts from Robert Kiyosaki on Rich Dad, Poor Dad, financial education book there. Investing, we're talking about real estate today. Today, we're talking about cash flow in real estate. In the cryptocurrency side of things, we're talking about what are centralized exchanges in cryptocurrency. That and market updates of each of those specific markets there we'll talk about today. As a disclaimer, the content here is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, or other advice, people. Nothing discussed constitutes solicitation, recommendation, endorsement, or offer to buy or sell any securities or financial products. There are risks associated with investing in securities. Investing in stocks, bonds, ETFs, mutual funds, and money market funds involves risk of loss. I'm not a licensed financial advisor, not a CPA, and I am not a lawyer. Please consult your licensed professional before making any decision. With that being said, again, this mastermind was based off of the concept of what exactly is a mastermind. And Think and Grow Rich, written by Napoleon Hill, more than 20 years studying some of the wealthiest people on earth, wrote this book. And it talks about the mastermind concept and what exactly that is. So without further ado, let's jump right into it. Where are we? So we're on Rich Dad, Poor Dad. And I think what page are we at now, actually? We're on page like 175 or something like that. Um, yeah, actually, page 175. Jose Mourinho is at Fenerbahce. This should be quite interesting. This is football news, by the way. This has nothing to do with investing, personal development, or anything like that. But for those of you who are football fans, that is big news there right now. Jose Mourinho being at Fenerbahce. I didn't expect him to go to Turkey. But from learning from a friend as to what exactly is going on in the Turkish Super League, should be an interesting development if they actually win and Galatasaray doesn't in the next year, because Mourinho delivers trophies. Anyway, enough rambling about football. Yeah, let's go on to Rich Dad Poor Dad and talk about money. Money, so you can go and watch Jose Mourinho live in Turkey. So we're on page 175, and go. Oh, whoops. 177. That's not where I am. Okay, here we go. Uh, three incomes. Okay, yeah, I think we're at the three incomes now. Yes, we're on three incomes now. So we're on page 175 in Think and Grow Rich. If you don't have a copy of the book, sorry, Rich Dad Poor Dad. If you don't have a copy of the book, just Google it, download Rich Dad Poor Dad. You'll have a lot of fun reading it, and your finances will be very thankful. So, we're talking about the three incomes. In the world of accounting, there are three different types of income. Number one is ordinary earned, second is portfolio, and the third is passive. When my poor dad said to me, go to school, get good grades, and find a safe, secure job, he was recommended I work for earned income. When my rich dad said, the rich don't work for money, they have their own money work for them, he was talking about passive income and portfolio income. Passive income in most cases is income derived from real estate investments. Portfolio income is income derived from paper assets such as stocks and bonds. Portfolio income is the income that makes Bill Gates the richest man in the world, not earned income. Rich Dad used to say, the key to becoming wealthy is the ability to convert earned income into passive income or portfolio income as quickly as possible. He would say, taxes are highest on earned income. The least tax income is passive income. That's another reason why you want your money working hard for you. The government taxes the income you work hard for more than the income your money works hard for. Hmm. Okay. If we read that again, you'd see something really, really crazy. So you're telling me, anyway, in my second book, Rich Dad's Cash Flow Quadrant, I explain the four different types of people who make the world of business. Number one, the employee. Second, self-employed. Third, business owner. And fourthly, the investor. Most people go to school to learn to be an E or an S. The cash flow quadrant is written about the core differences of these four types and how people can change their quadrant. In fact, most of our products are created for people in the B and I quadrants. In Rich Dad's Guide to Investing, book number 3 in the Rich Dad series, I go into more detail on the importance of converting earned income into passive income and portfolio income. Rich Dad used to say, all a real investor does is convert earned income into passive and portfolio income. If you know what you're doing, investing isn't risky. It's just common sense. The key to financial freedom and great wealth is a person's ability to convert earned income into passive and or portfolio income. My rich dad spent a lot of time teaching Mike and me this skill. Having the ability is the reason my wife Kim and I are financially free, never needing to work again. We continue to work because we choose to. Today, we own a real estate investment company for passive income and participate in private placements and initial public offerings of stock for portfolio income. We also went back to work to build a financial education company so that we can continue to create and publish books and games. All of our educational products are created to teach the same skills my rich dad taught me, the skills of converting earned income into passive and portfolio income. The games we create are important because they teach what books cannot teach. For example, you could never learn to ride a bicycle by only reading a book. Our cash flow games for adults and cash flow for kids game are designed to teach players the basic investment skills of converting earned income into passive and portfolio income. They also teach the principles of accounting and financial literacy. These games are the only educational products in the world that teach people all of these skills simultaneously. Cashflow 202 is the advanced version of Cashflow 101 and requires the game board from 101 as well as full understanding of 101 before it can be played. Cashflow 101 and Cashflow for Kids teach the principles of fundamental investing. Cashflow 202 teaches the principles of technical investing. Technical investing involves advanced trading techniques such as short selling, call options, put options, and straddles. A person who understands these advanced techniques is able to make money when the market goes up as well as when the market comes down. As my rich dad would say, a real investor makes money in an up market and a down market. That's why they make so much money. One of the reasons they make more money is simply because they have more self-confidence. Rich dad would say, let me skip this page. They have more self-confidence because they're less afraid of losing. In other words, the average investor doesn't make as much money because they're so afraid of losing money. The average investor doesn't know how to protect themselves from losses, and that is what Cashflow 202 teaches. Average investors think investing is risky because they have not been formally trained to be professional investors. As Warren Buffett, America's richest investor, says, risk comes from not knowing what you're doing. My board games teach the simple basics of fundamental investing and technical investing while people are having fun. I occasionally hear someone say, your educational games are expensive, which poses the question of ROI, that's return on investment, or the value return for the price paid. I nod my head and reply, yes, they may be expensive, especially when compared to entertainment board games. But my games are not as expensive as a college education. Working hard all your life for earned income, paying excessive taxes, and then living in terror of losing all of your money in the investment markets. When someone walks away mumbling about the price, I can hear my rich dad saying, if you want to be rich, you must know what kind of income to work hard for, how to keep it, and how to protect it from loss. That is the key to great wealth. Rich Dad would also say, If you do not understand the differences in those incomes and do not learn the skills on how to acquire and protect those incomes, you will probably spend your life earning less than you could and working harder than you should. My poor dad thought a good education, a good job, and years of hard work were all you needed to be successful. My rich dad also thought a good education was important, but to him it was also important that Mike and I know the differences in the three incomes and what kind of income to work hard for. To him, that was basic financial education. Knowing the differences in the three incomes and learning the investment skills of how to acquire the different incomes is basic education for anyone who strives to acquire great wealth and achieve financial freedom, a special kind of freedom that only a few will ever know. As Rich Dad states in lesson number one, the rich do not work for money. They know how to have money work hard for them. Rich Dad said, ordinary earned income is money you work for, and passive and portfolio income is money working for you. Knowing that little difference has been significant in my life, or as Robert Frost ends his poem, and that has made all the difference. All of you were given two great gifts, your mind and your time. It is up to you to do what you please with both. With each dollar bill that enters your hand, you and only you have the power to determine your destiny. Spend it foolishly and you choose to be poor. Spend it on liabilities and you join the middle class. Invest it in your mind and learn how to acquire assets, and you will be choosing wealth as your goal and your future. The choice is yours and only yours. Every day, with every dollar, you decide to be rich, poor, or middle class. Choose to share this knowledge with your children, and you choose to prepare them for the world that awaits. No one else will. You and your children's future will be determined by choices you make today, not tomorrow. I wish you great wealth and much happiness with this fabulous gift called life. Signed off, Robert Kiyosaki. And that's the end of Rich Dad Poor Dad, everybody. Yay, we finished the book. For those of you who joined me from the beginning until end, congratulations. If you have been continuously reading along with me, or you've just been reading the book by yourself, right? That's really what it is. It doesn't matter whether you're reading it with me, reading it by yourself. The key thing is that you learn from this book and you should have been financially smarter at the end of this. I mean, you didn't pay all this money to a school to learn. But what you did is that this is what's called self-education. I remember one of my mentors saying it to me: formal education will make you a living, self-education will make you if you know it, a fortune, right? That's what it is that my mentor used to always say to me. And I've realized that that's been so true over the years. And as it is that I'm even continuously learning, I'm always a student of life. And so here in the last part, I'll summarize. We talked about the three incomes, and we'll wrap up Rich Dad Poor Dad next week. We talked about the three incomes: ordinary earned income, portfolio income, and passive income. So, three different types of income. Ordinary earned income, likely, most people, they work a job and then it's like, okay, you have that money now, what do you do with it? Rich Dad says that the people who become wealthy are the people who put it into portfolio income and passive income. Then he talks about how passive income is actually taxed in a lot of cases way less than earned income. And if you actually look at your tax laws of your jurisdiction, you realize that in some cases that is the truth. That is the truth. It's not like naturally any passive investment that you make that you automatically get pay less in taxes. That's not exactly what it's saying. So and then he goes on to talk about, so what he's saying is that use your ordinary income. I mean, keep your job. Don't just quit your job and say, oh, I'm gonna figure it out. Business is not this rosy bed of, oh, I'm in business and it's great. Actually, some people who are in business just have simply a job, right? Yes, you're managing a business, but you can't sleep at night. You don't have time for yourself to do the things it is that you really want to do. You cannot change your physical location for an extended amount of time. Now, are you really free? Do you want to be in business, or is the thing you really want is time freedom, locational freedom, and financial freedom? And so, it questions you as to what exactly do you want? You don't want to go in business. You want to stay true to the things that you want. You want to live your best life. You want a financial freedom, time freedom, to visit beautiful countries, see beautiful places, spend time with people you love and care about. The real thing you want is your time back and your freedom. And a lot of people, we tend to forget that. And so, jumping into a business sometimes is great. And for a lot of people, it's their passion, right? For a lot of people, it is their passion. And so, it's about, what do you really want? Or is it what you really, really, really want? If you ask yourself that, then, write that down, decide what your goals are, realize that, okay, is what I'm doing financially right now going to get me towards that goal? And if the answer is no, then chances are you probably need to get a little bit more financially educated. And it's not by necessarily going and getting an MBA. That's great, but there are different things that come with that. So here Kiyosaki talks about, go and buy the book, read it. It's free online. Play the game, the cash flow quadrant, right? Cashflow Quadrant 101, Cashflow 101, and Cashflow 202. And read the rest of Robert Kiyosaki's books, and talks about his guide to investing and the Cashflow Quadrant. I remember when I was on my way to this event in Mexico, and I read off the book on that trip. I was so engrossed into it. That was my first time reading Cashflow Quadrant by Kiyosaki, and that defined a lot of things for me at a key point in my life as I was learning different things. So he talks about the key to financial freedom, and it's having that ability to go ahead and utilize that financial knowledge that you've learned, implement it into your own life, and use it to get the things it is that you really want. I don't know what you want. You need to decide what the things it is that you want. So it's been a really fun read. Um, if you haven't read the book, recommend it to a friend if you found value in it. I know somebody recommended it to me, and I took action on that. And so here I am now deciding that, hey, I'm going to share this with other people. So, that's been great. That's been cool. Take action, like Kiyosaki talks about. I wish you great wealth, much happiness with this fabulous gift called life. Live it to the fullest. So, with that being said, I'm gonna pause there for now. We'll wrap up Rich Dad Poor Dad next week, and I'm taking suggestions as to the book it is that we do next. But the next book that I have in mind is The Magic of Thinking Big. Fantabulous book. I had the great pleasure of reading that book, and it was really expanded my mindset in different ways that I was really happy about. And so we continue to learn and we continue to grow. So, with that being said, let's jump into one of these vehicles now of getting to where we would like to be, which is real estate. Today, we're talking about cash flow, people. And what exactly is cash flow? So, let me jump right here. So, um, pretty basic. Investing in cash flow real estate, also known as rental property, it can be an effective way to generate a largely passive stream of income. You buy a property, install a tenant or two, and collect monthly rent payments. Sounds simple enough, but there's a little more involved in making sure that a rental property is worthwhile investment. Knowing how to calculate cash flow in real estate matters for maximizing profits as a property owner. So, what exactly is cash flow in real estate? In simple terms, it refers to the movement of money in and out of a business. When you're discussing real estate, you're talking about money that's generated by the property, that's rental income, and money that's spent in association with the property. So, real estate investments can generate positive cash flow or negative cash flow. When a property has positive cash flow, its income exceeds expenses. When there's negative cash flow, on the other hand, expenses exceed income. Positive cash flow is preferable for real estate investors because that means that you're making money on the property um, that you own. The wider the profit margin, the better their return on investment. Positive cash flow can also make real estate investors investments easier to maintain since you may have a surplus of cash you can use for maintenance, repairs, and upkeep. So, how exactly do we go ahead and calculate this cash flow here right now? So, firstly, you need to know your gross income, and that's your income before any expenses are minus. Number one. Second, you need to know your expenses. What are your expenses like for the property? And then what are your debts associated with the property? Likely a mortgage. So you have gross income minus your expenses, likely, for example, heat and light, if it is that you're the one paying them, insurance, property management, water and sewage, and you can go ahead and list the others it is that you may have depending on the property that you have. Then you see what your debt servicing is. So how much is your mortgage? And so after that, you're gonna minus all of these expenses from your gross income, and that gives you the cash flow. So your goal is obviously to get positive cash flowing assets. Some people are okay with getting negative cash flowing assets. And here you can see some of the expenses that are outlined right here. So um, I mean, that's the basic breakdown of what exactly cash flow is. So it's just like anything else, your grow money in and out. So gross income minus your expenses minus your debt servicing, and that equals your cash flow. Many of you actually, if you calculate the cash flow on properties, you'd realize that people make a lot less money in terms of cash flow from a cash flow standpoint on properties than you may think, right? Most people don't normally buy real estate for the cash flow. You buy it normally for the different benefits and the advantages such as mortgage pay down, equity building. Cash flow is one of those things, right? And you're looking at the tax advantages as well. So it's like a multifaceted approach you take. You don't just jump into real estate and think, oh yeah, I'm suddenly making this amount. Well, when you pay this in rent, their landlord is actually have a whole bunch of expenses, and then there's maintenance. The roof needs to be done, the lawn needs to be taken care of, there's this, there's that, you have this thing that needs to be repaired. So you'd actually be surprised that the it's just like sometimes hundreds of dollars that real estate investors make in profits in terms of cash flow. So um we look at that. We also budget there for our vacancy as one thing, depending on the area that we are in. So that's what we're looking at there for real estate. So again, I'm using basic information that is online. Anybody can really find this information. I keep it that way because information is free and it's really easily available right out there. You can take that, utilize it, and implement it. And if you're confident enough, then go ahead and apply it into your life, because you need to take action at some point, right? You can also shorten that learning curve by investing in yourself and education to get courses, finding mentors, and more. So, what are we seeing with the news this week? Top stories: Canadian policymakers want high home prices and investors flee. Canadian home prices need to be high to pay for retirements, says the Prime Minister. This is interesting. I did not read this article. I need to read this article. That's an interesting statement. Anyway, um, so Justin Trudeau said the quiet part out loud. In a recent interview, the country's head of government stated that he wants affordability to improve, but prices need to be maintained for retirements and nest eggs. Mm. It's a bit disingenuous to pretend that households planned on record price growth to occur over a short period based on emergency race costs based on pandemic, but let's look past that. So this should be quite an interesting read if it is that you're reading. This is Canadian based, so that's a whole other different thing. If you're not in that economy, then it's a whole different thing as well. Canadian households just entered a lost decade of economic growth. Canada sees investment flight as economy slows and government targets investors. Um, what else are we seeing? Canadians now consider stocks to be their preferred investment, according to a survey. Nova Scotia GDP per capita slipped all the way back to 2016. Man, does this thing ever have any good news? Canadian real estate profits shrank more than any other industry. Canadian business growth is the slowest in years. Monthly closures rise. You'd think that this better dwelling never puts out any positive stuff. Um, But that's not what the it's there for. It's there to just tell you the news as it is. So Justin Trudeau is saying that home prices need to be high to pay for retirements. Yeah. So home prices need to be high to pay for people's retirements and their nest eggs that they've been saving up their whole lives for. That's a very let me not I don't try not to get too subjective in this, but that's an interesting way of putting all of this to say that that's really what needs to happen. And so you're not surprised when it is that investors leave Canada and they go to other places to invest. And then you see this article where Canada sees investment flight as economy slows and government targets investors. So we're seeing investment flight. Investors are not staying here. Economic growth has slowed. And this article is saying that the government has targeted investors, a lot more investors, with when you look at the tax laws and when you sit down and analyze different things as to what is it really like owning investment in Canada. Is it as rosy as it sounds? Canadian households just entered a last decade of economic growth. One second, I need to drink some water, by the way. Yeah. Nova Scotia GDP per capita slipped all the way back to 2016. So interesting. The erosion has sent the province all the way back to the same level as 2016. G per capita, real GDP hasn't just failed to retake its pre-pandemic levels, but it's now a steady slide lower. The erosion has sent the province all the way back to the same level as 2016. Rather than experiencing an economic boom, the growth that greatly outpaced the local economy's capacity to grow has led to stagnating real incomes. And again, when you look at these headlines, you need to remember that they're also meant to catch your attention. You need to go into the article, take it apart, analyze, read, and understand the information that's going on there. Canadians now consider stocks to be their preferred investment. Okay. So it's not real estate, it's stocks. Canadian real estate profits shrank more than any other industry. Mm. So we're seeing where business growth has slowed. We're seeing where investors have fled the country. Um, Small amount of GDP growth for Nova Scotia, particularly. So that's one province that, really, in this whole time when interest rates have been up, a lot of people have fled to Nova Scotia to because they could get the city life, but it was also cheaper home prices. You found when it is that you sit down and look at the numbers, and this article is saying that we've just entered a last decade of economic growth. So really interesting reads that we're seeing there. And again, there are always opportunities out there in real estate. Don't let the news deter you. Go out there, get educated. Um, do the things it is that you want to do in order to achieve your goals. Don't let because the news seems so negative that you don't take action. It can be really draining. You look at the news and it's like bad thing, bad thing, bad thing, bad thing. Well, that doesn't mean that there aren't still great opportunities. There are still really great opportunities out there, right? Get connected to realtors, mortgage brokers, fellow investors, learn and see what it is that they're up to, what it is that you can do in order to get to the next level. And again, it's always easier when it is that you have mentors as they shorten the time frames as to how long that takes you. So you don't have to be, making all of these mistakes unless you really like doing it all yourself. With that being said, I'm going to jump into the next thing now, which is about cryptocurrency. What exactly is a CEX, a centralized exchange? So these are a type of cryptocurrency exchanges that are operated by a company and that's owned in a centralized manner. So they most commonly facilitate trades between, so an exchange facilitates trades between users by maintaining an order book. So a collection of buy and sell orders posted by individual traders. Orders are requests to buy or sell a certain amount of a specific cryptocurrency at a certain price. CEXs aggregate orders from their users and then use special software to match and execute the corresponding buy and sell orders. For those of you who don't understand what all that means, simply put, a company puts all of this together, say, hey, this is how you can go ahead and buy cryptocurrency. We'll do all of the management and stuff on the back end. We'll make this really nice user interface. You can send your fiat money here and you can convert it into cryptocurrency. You can also swap cryptocurrency from one to another. You can sell cryptocurrency into fiat and more. And there are thousands of different exchanges out there. So now let's actually see some of the exchanges. So you'll see that there are 774 exchanges listed here on CoinMarketCap. So let's click on them and let's look at them. Some of the centralized exchanges. So depending on where it is that you are, different ones will work for you. So we can see here, Binance is one of those real big ones. Coinbase is a second one. Bybit is here, and you see trading volume, average liquidity, weekly visits, number of markets, number of coins, fiat supported, and the volume graph, you can see it right here. OKX, Upbit, Kraken, KuCoin, Gate.io, HTX, not FTX, right? That's a whole other different story. That was way up there, actually. HTX, Bitfinex, Mexi, BitGet, right? Crypto.com. Canada had a big thing where it is that a lot of the exchanges, they are no longer in Canada. And so you'll find a lot of these do not operate in Canada. So you'll have to look around for a bit for an exchange that's supported in Canada. I think crypto.com is one of those exchanges, but Google, find out, it's fine. You make an account, they say it's not allowed. Okay, yeah, sure. I'll just have to try another one. So you see where there are a lot of different coins right here. The trading volume, Binance has the biggest trading volume, as it is that you can see, followed in the last 24 hours, followed by Bybit. Yeah, followed by Bybit. That, yeah, am I seeing that correct? Yeah, I'm seeing that correct. It's followed by Bybit, and you have a couple others there in a close third. So that's what a centralized exchange is. So likely if you own cryptocurrencies, likely on a centralized exchange. Most people don't get used to utilizing decentralized exchanges and decentralized wallets such as Trust Wallet, MetaMask, and others. And so let's see what's going on in the markets here. So the last 7 days, we're seeing a lot of red. Dogecoin is down 5%. Bitcoin is at 68,977. Not much change over the past 7 days, so not a lot of movement. Ethereum is down 2%, not too much. We had the ETFs coming out last week, well, 2 weeks ago, roughly. BNB is up 3%. So no crazy changes we're seeing there this week. Last week, we saw some big winners, actually. Toncoin has been going crazy. It is now up 7%. I think that's close to its all-time high. If you bought Toncoin in the past 3 months, you've probably made money. I think in February, March, April, May, June. Oh, 3, 4 months. So yeah. If you look at the chart, I was looking at it there recently. So you can see the spike. Whoop. Yeah. All of that is great and nice stuff. So we're seeing where Polkadot is down 7%. Near Protocol is down 9%. Pepe is down 13%. Uniswap down 13%. Casper, big winner so far, is up 20%. Casper is up 20%, up 24% in the past 24 hours. So, sorry, up 70% in the last 24 hours. So you realize that a lot of that growth was just within the past 24 hours. I wonder what caused that. Aptos is down 6%. And so now that you see that a lot of things are down, you love red. You should just love red. Whenever you're seeing red is down, great. That's the one it is that you want to buy. Not when everything's in green. When it's in green, people who are more experienced are making money because you go ahead and buy when it's green, and that's the time when the more experienced people are selling. Monero is up 9%. ARWeave is up 8%. BitTensor is down 11%. Notcoin has been going crazy. Look at this, people. I don't think you can have something that beats this in the past couple of days. Notcoin is up 167%. Like, you have to rub your eyes to look at it properly. Is this stuff even real? 167%. Wow. Bank is down 17%. Thorchain is down 12%. Ondo is up 12%. Jasmine is up 35%. These crazy double-digit numbers that would drive the stock market crazy. Wormhole is up 12%. Wormhole, like what? Akash is down 19%. So again, like when you see stuff that's down like 19%, I'm not telling you to buy. I'm just looking over this stuff. But likely you'll make more money when you buy when a lot of things are down. So if you want to like buy, you can go ahead and do something like this. You go ahead, click on the cryptocurrency when you see it's like way it's down. And after you click on it, then you go ahead and say, I see that this thing is down. You go ahead. Obviously, there are a lot of different other factors it is that you look at. But if you're just looking at the price, then seeing a big red is a good thing there for you when you're looking at buying. If this thing loads sometime today, then I'll be able to pull up the full chart and then show you what's going on. What is going on? Yeah, this thing is taking way too long to load. Let me go back here, actually. Here we go. Okay, finally loaded. So if we go on the chart there for all time, we realize that, wow, it's down. So it started in April 2021, had a great time, then wham, nothing happened. And then something happened, and then went all the way from 34 cents all the way to close to its all-time high of $6. Now we're at $4.40. So we're just around this support level right here. As you can see, if you don't know a little bit about trading, you don't know what I'm talking about, that's okay. So we're just around this support level right here. And so, could it go to $6 again? Probably. I don't know. I don't have a crystal ball. But you get the point. It's down. It could go up to $6. Don't look at the fact that, oh, well, I could have bought down here. Well, you didn't buy down there. So, that's already spilt milk. Now it's at $4.40. And so you want to look at the long term. You want to look at the long term. I like when I talk with people and they're like, oh man, like I bought crypto, I tried it didn't work. Oh well, what did you do? Well, I bought Bitcoin and then it hasn't been doing anything. Well, when did you buy? I bought it at 70K. Okay, Charlie. So you expect it to just happen tomorrow? Like look at the chart, bro. Dog go to the moon is up 111%. This thing. Dog go to the moon. The dog really is going to the moon these days. 111%. So that thing's up 111%. That's crazy. And then you had the other one that's up like 100 and Notcoin is up like 150 or 160 something percent. Clayton is up 14%. IOS is down 10%. Let me see if there's anything else crazy. Mantra is up 34%. Let me see. Let's see if there's anything else crazy. Constitution DAO is still going up, 35.7%. Is this an actual DAO or not? Trust Wallet token. Lots of people using Trust Wallet these days. Well, I mean, it has always been 10%. FTX token still maintaining its position. You still have the bag holders, 140 rank now on CoinMarketCap. Arkham up 7%. Engine Coin down 22%. Let's see if there's anything else crazy going on. Pixels is up 21%. MX token down 10%. Arc block down 10%. Binary X is down 21%. Zeta Chain down 11%. Origin Trail is down 11%. And so we have our two winners. Dog, go to the moon. And what's the other one again? Not coin, right? Not coin and dog go to the moon. So we have our two winners with 100 and something percent. That's going on right here. So that's that for today. We have our winners. And again, so today, let's see what we went over. Let's just recap. Under our Rich Dad Poor Dad, the three different types of income: ordinary earned income, portfolio income, and passive income. You want to get your earned income that you're maybe working from your job as quick as possible into portfolio income and into passive income. You know, whatever it is that that may look like for you. It could be real estate, it could be stocks, dividend yielding or not. Whatever it is that that may be, you know, you go ahead and do your thing with that. And that's what Kiyosaki talks about. So we're conclude with Rich Dad Poor Dad next week. Play the game Cashflow Quadrant 101 and 202. Today we also went over cash flow in real estate. So how exactly do we calculate that? Gross income minus our expenses. So likely, you know, your property taxes, insurance, property management, water and sewage, heat and light, electricity, and a couple other things. It is that depending on the property it is that you own, as well as your debt servicing. So you minus your expenses and your debt servicing from your gross income, and then you have your cash flow. Talked about news in Canadian real estate. Not so positive things there that we were seeing. Policymakers want high home prices. Investors are fleeing Canada. Last decade of economic growth. So check out those articles. And in the crypto world, we had the Ethereum ETF approved within 2 weeks ago. We also saw where not much movement in Bitcoin, and the biggest winners being Dog go to the moon with 111% growth over the past 7 days, as well as Notcoin 100 and like 50 something or 30 something growth over the past 7 days. So that's what we had going on there. And for definitions in crypto, we had centralized exchanges. So again, simply put, that's just a very simple way that other people, they build their companies, say, hey, we'll, you know, be the marketplace for the buyers and the sellers. We'll aggregate all the information, the users, make it look pretty. So it is that you guys can all just come on and make and just pay us trading fees. And then you can go ahead and buy crypto, sell crypto, swap crypto, whatever you want to do with crypto. They make it easier for you, and they make money on your trading fees. It's a highly regulated field. As you can see, CZ is going to jail for a bit. Biggest crypto exchanges that we saw: Binance, Coinbase, Bybit in terms of trading volume. So with that being said, I will conclude here for now. So everybody, big up on yourself. Peace and love. Conclude with Rich Dad Poor Dad next week, and probably move on to like The Magic of Thinking Big or some book like that. And so peace and love. I'm out. Take care and bye-bye.